What if I told you one of the best performing blockchain of this entire year also just printed the ugliest price chart in its own history? That's not a hypothetical. That's Polygon right now. Record transactions, record users, PayPal building directly on the chain, and the token POL just closed the lowest weekly candle it has ever recorded. So either the market knows something the data doesn't, or this is the exact kind of fear that pays the people who stay patient. Let me show you which one I think it is. Here's the setup. POL is trading around 7 to 8 cents. For a token that peaked near 75 cents after the migration from MATIC, that's a brutal drawdown, and the sentiment matches it. Almost everybody I talk to has written this chain off. Dead money, they say. Old narrative. And I get it, because if you only look at the price, the story writes itself. But price is a lagging signal. It tells you what already happened, not what's building underneath. And underneath Polygon, something strange is going on that almost nobody is pricing in. The fundamentals are not just holding, they're breaking records. So the real question is not whether Polygon is alive, it's why the chart hasn't noticed yet. Let's start with the one stat that stopped me cold. In this entire year, Polygon didn't create a single new token out of thin air. Roughly 105 million POL were minted, but the network burned close to 108 million through base fees. Read that again. The circulating supply actually shrank. Now compare that to the rest of the market. Solana added over $1 billion of fresh supply. Ethereum, close to $500 million. Every one of those chains diluted their holders, while Polygon quietly did the opposite. In a market built on scarcity, that's the kind of detail whales notice long before retail does. And this isn't a quiet, empty chain either. Polygon just closed out its second quarter with 743 million transactions, an all-time high, growing more than 160% year over year. One recent week alone crossed 7.5 million transactions. So where is all that activity coming from? Payments. In the first half of this year, payment apps on Polygon settled around $11 billion. We're talking Stripe, Robinhood, Revolut, Paxos. Real financial rails, not crypto tourists. Then it got serious. PayPal is now issuing its stablecoin, PYUSD, natively on Polygon through Paxos, fully regulated. Polygon is becoming a default settlement chain for stablecoins, already moving more than $2.5 billion a day. A new shared stablecoin called OpenUSD is arriving too, backed by names like Visa, MasterCard, BlackRock, and Western Union. I'll be honest with you, that one isn't exclusive, it's launching on other chains as well, so I hold it a little looser. But the direction is unmistakable, and the raw capacity is there to handle it. A single Polygon block recently pushed past 5,000 transactions per second, more than double its old record. It sits second in the world for bridged stablecoin supply, holding over $2 billion, and it has one of the widest holder bases in crypto, north of 140 million wallets. Here's where it gets almost unfair. There's a new standard for machine payments called X402, the rails that let AI agents pay each other automatically. Cloudflare just announced a gateway built on it. And of every single one of those transactions happening across crypto, Polygon is settling roughly 93% of them. Not a lead. A near monopoly, in the fastest emerging category on the internet. So it's all perfect, right? No. And this is where I earn your trust instead of selling you a dream. Look closer and you find the cracks. Total value locked on Polygon dropped 23% in 1 year. Lending activity collapsed by over 70%. And despite all those record transactions, the network only captured about $12.7 million in actual revenue this year. That's 0.3% of the entire Layer 1 category. On top of that, the app economy here has become dangerously dependent on one platform, Polymarket, which alone prints more fees than the next 13 apps combined. So which is it? A deflationary chain with Qualcomm, Cloudflare, and 2.3 million real monthly users? Or a busy network that gives almost none of that success back to its own token? Both things are true at the same time, and that contradiction is the entire trade. Because the chart is about to tell us which side the smart money is betting on. Since the end of 2024, when POL topped near 75 cents, price has been locked inside one long descending channel. Those orange dotted lines have contained the entire decline. And for most of that time, price has tracked the midline of the channel, that white dotted line running right through the middle. And last week, we printed the lowest weekly close this token has ever seen. That's the definition of peak fear. Structurally, it's ugly, and I won't pretend otherwise. Price is trading below the 10, the 21, and the 55-week moving averages. When every major average sits above price like that, the trend is still down, and anyone accumulating here is fighting the tape. That's the risk, but here's what changes the calculation. Let me walk you through the Fibonacci. I anchored this from the 16-cent low in June up to the 29-cent high in August of last year. Project that structure forward, and you get two levels that matter. The 1618 extension sits at 11 cents. That's my first ceiling, my de-risking at resistance zone. And the 2618 extension sits just under 7 cents. That level right there is doing a lot of work. It's the last bounce zone, it lines up with the all-time low, and price is testing it as we speak. Now drop your eyes to the indicator below the price. That's the Heikin Ashi RSI, a smoothed way to read momentum. It's still deep in oversold territory, so momentum hasn't flipped yet. But watch the slope. Price made a lower low, while this indicator made a higher low. That's called bullish divergence, and it's one of the earliest signs that selling pressure is running out of fuel. It doesn't guarantee a reversal, it just means the engine is slowing down. So what am I actually doing with my own money? I'll be transparent. I've made 20 videos on this token, and I've stopped adding fresh cash here, because honestly, averaging down was eating into profits I'd already banked in the past. Instead, I'm accumulating a different way, through liquidity pool fees on Uniswap, pairing POL with ETH and Link, so the position compounds while I wait. My long-term bag, the one I've held since 2021 when this was still MATIC, I'm not de-risking that at peak fear. I'll wait for this weekly to actually push into overbought before I touch it. For a shorter-term trader, I'll say this plainly, and it's not advice, just my read. This is one of the cleaner entries on the board, using that 2618 fib level, just under 7 cents, as your invalidation zone. If a weekly candle closes below it, the setup is simply wrong, and you step aside. Hold above it, and my upside targets stack at 16, 20, 25, 42, and 60 cents, trailing my invalidation up behind price as each one gets hit. So let's put both halves together, and think in probabilities, not certainties. The bull case is simple. A deflationary token, record usage, PayPal, Cloudflare, real users, sitting at an all-time low with momentum starting to turn. If that revenue finally catches up to the activity, this is a generational accumulation zone, and the risk-reward from 7 cents is enormous. The bear case is just as honest. That 12.7 million in revenue is the whole problem. If Polygon keeps winning volume but never captures it, if they stay hooked on Polymarket alone, and if the burn rate can't stay ahead of new emissions, then the token can keep bleeding no matter how good the headlines look. Below the 2618, I have to respect that scenario completely. What would flip me from cautious to aggressive? Two things: a weekly close reclaiming above 11 cents and breaking out of oversold. Until then, my base case is patience. Accumulate slowly, protect the downside, and let the chain prove it can finally pay its own token. Polygon is winning almost everything, except the one thing that matters most to us: value flowing back to the token. The price is at maximum fear while the fundamentals print record highs. And the whole bet comes down to whether that gap closes or whether it's a warning we should respect. If this helped you think a little clearer, hit that like button and subscribe. It genuinely helps me reach more serious investors like you. And if you want to go deeper, that's exactly what the Pro Capital Vault is for. Inside my private Discord, through the channel membership, you get my real-time portfolio, my exact accumulation and de-risking zones, the Sunday prep report, our weekly live strategy calls, and direct access to me. It's where I show my actual execution, level by level, not a hype room. Just hit the join button below the video or the link in the pinned comment. Sync your YouTube account to Discord, and every private channel unlocks automatically. Think of it as sitting on my side of the desk. Now, one thing I genuinely want in the comments. At 7 cents, is POL the best risk-reward on the board right now, or a value trap you wouldn't touch? Tell me why. And if you missed my last Polygon breakdown, watch that one next. It sets up everything we covered today. None of this is financial advice, it's my own analysis and my own strategy. Protect your capital, do your own work, and I'll see you in the next one.